All right, good. Now we're back. Praise the Lord. Hallelujah. Praise the Lord. All right, look, our biggest winner on the board is at 50%, y'all, and that is X. Look at all these closing signals I'm getting on X. We just put that trade on when? Put it on the 7th. No, what is it, X? Yep. We put it in on the 18th. 4 days, baby, and we're at 50%. You got to close that, mama. So let's go closer. Closer, 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 X. Unbelievable. Are you doing this to me now? Some days I wonder why I get out of bed. It's like the whole world's after me right now. Hold on, let me make sure it's not giving me something on the other screen. Y'all, thank y'all for y'all's patience. There we go. X is my big winner. Let's close it for 31.50 profit. Create closing order. It's like, the first time when you're going out with that significant love interest in your life, and the very first time after you go to the McDonald's, watch the movie, and you're on the way home, and then without even knowing it, you just pass gas with your loved one in the car. And they just kind of look at you for a second, and you kind of look back, and you both giggle a little bit, but you go, I'm comfortable. I'm just so comfortable. It's the way it feels with y'all guys. Not that I would, do that in front of y'all, but I'm just saying that it's comfortable that when we have this little issue, see if we'll get out of this one at 30 cents. Something beat. There we go. So we're out of that one at 30 cents. So let's record that one before we start doing our new stuff today. Get our account just like we like it. Okay, so we're going to take our option name out because we don't need it anymore. And we're going to put 0.30 in there at the current day price, which will be the closing price. Yep. 49%. We're going to call that 50% though. And we go here and close it out. So put 222.21. That's going to help our stats, isn't it? What the devil is that? My whole machine's just messed up. So we're going to call that a 50% profit close in 4 days. Can't beat it. That must have been who brought that one up? I would take credit for it since it was such a good trade in such a short time. Did Matt bring that one up?
I think that
Kings is totally Matt. Totally. Create closing order. No, I don't want to sell my stock. Gosh, I was about to unload my stock. Hold on. Remember, we got 7 shares of this puppy. We want to close that put. Here we go. Create closing order. Buy it at 75. We're going to try 74. So we greedy. Got to pay the babysitter. Are we filled? Nothing. Crap, jack, nothing. So we'll go in at 75 and get her closed. Come on, get me out. There we go. 75. Love taking profits on DraftKings. So our closing order there was 75 with a very delayed bell. Even I doubled my internet speed. It didn't help the bell any, did it? You would think it would. So we'll call this one a Tasty Trade Optimum Close. 222.21. And that's all portfolio management is, taking your winners, managing your losers, just doing it over and over and over. Tasty Trade Optimum Close. We about to get in some weird stuff though. We'll see what it's about. All right. Taking a winner. Look at us. All right. Any more risk I want to take off? Let's see. I'm getting 41% on my silver position. It says this Tasty Trade Optimum close too. You know what? It's only a profit of $16.90, but That fits the bill. We'll take their Tasty Trade Optimum close. We'll take that off. So let's go take it off. We'll take silver off. And again, I'm looking at my whole portfolio going, I need to take some stuff off. Why? Because I'm using way too much buying power. I don't need to be using over 50% buying power. Unbelievable. Y'all, I just need to curl back up in bed. I ain't been up long, and you can probably tell. But with all this stuff that's happening, look at this. Why are you doing this to me, friend? Why? All right, let's close silver. Maybe the universe is telling me I don't need to be closing my trades. All right, so let's get out of silver. Could I get filled at 23? Probably not. The way the day's going. Stupid Monday. Rainy days and Mondays always get me down. Unbelievable. I mean, it won't let me do anything. Look at this. Get me in there. My kids ain't at home. I feel like I could cuss right now. Those little cusses are back in school. Unbelievable. Just unfreaking believable. Y'all must have the patience of Job to stay with me. This is incredible. All right, let's see if we can get back now. All right. So that's not working because we knew it wouldn't because it's Monday and I'm being plagued. I feel like Al Gore after the 2000 election. All right, out at 24. Is that right? What I got filled at 24? All right, so let's go tap that in. Let's take our profit sold silver at 24. Now I hear a hawk outside, probably trying to kill my chickens. Unbelievable. What else can go wrong this Monday? Don't say that. Whew, let me keep it quiet. I need to tell y'all about the day I had my accident in 2009. I wrote on Facebook, I said, this is the worst day ever on the day before my accident. And then the next day I had a car accident. I was in the hospital for 51 days in a wheelchair for 6 months. That was not good. All right, so we're out on this at 2:22. I said I'd never say, oh, this is the worst day ever. So we're out of that at a Tasty Trade Optimum close. We'll call that one. I just love closing these older trades too, right? Tasty Trade Optimum close. There she goes. Look at the chat. Let me guess. Something's going wrong. Y'all can't see something. Well, of course, chat won't pull up either. So unbelievable. All right. Not that we're surprised. So let's close this one out in the greeny. Please tell me y'all are still there. Matt, can you hear me?
I'm here.
Okay, just make sure you're there, Matt. All right, since everything's froze up on me. So we got that closed. I'd love to close my UVXY trade. Man, that's a take profits on that. We're up $30 on that. Oh, we do have a Tasty Trade Optimum on this, but what is that? That is our old friend. Hey, say it, Matt. Palantir.
I think that's how you pronounce it.
Palantir. I never know. That's our second win in this trade. Look at that, y'all. How does Daddy do it? I love that trade. But
Listen to me.
Yeah, I listened to you on it. Who was that? Who said who was?
Ken.
Ken. I listened to you on it. That's right, Ken. You probably wouldn't take profits here. You probably let it roll a little bit longer, and that's probably what you should do. But I'm in a closing trade mood because I need to take risk off.
Well, actually, I put some on today.
You put risk on? What? Tell us what you did, Ken. We'd like to know.
Well, let me go look at my thing so I don't tell you a big lie here. I'm going to look at my. Well, see, I went back in because the reversal pattern was on Friday, so I bought 4 leaps on Friday, and I bought a few more today, and I sold some way out of 35 calls expiring Friday on all that. I had 4 to begin with. So now I'm long 12 leaps and short 7 uh, contracts at 35. And then I got a vertical put spread going right now. I'm in an IRA, so I'm a little leery about doing too many short. Well, I can't get the margin for.
Oh yeah, yeah.
So I have to do full margin for short puts. So I don't have the legs to do just a naked put, which is what I do. Right now it's a down day, and it's doing what I thought it would do. Usually when that pattern that I talked about in the chat happens, there's usually this day would be a down day, and it is. So this is a good day to go long. You know, I wouldn't sell short calls here or naked calls here at all ever on this stock. It's explosive.
Oh, absolutely. Like I told you, I think my days of selling calls on stocks is over, right? I've seen enough this year to, I've seen enough people lose 60,000, 100,000 in a couple of days to pretty much, do me.
Yeah, gotcha. I was in a short strangle with steel, and I got out of the short put, and I'm hanging in there with a limit order on the short call, which makes me about as uncomfortable as a cat in a room full of rocket chairs. Yeah.
Yeah, I don't like being uncomfortable. Do you? I don't.
Yeah. Nope.
XLE. Why is my thing saying this is so good? Where's my call? Let's see. XLE. Let's look at this. What do I have here? I thought I had a call somewhere on XLE and a put. Let's see. XLE. Where is it? I mean, there's XLE my put, but I've got a call somewhere. I know I do. XLE, put, row, XLE, put, XLE. Maybe it's up here. Ah, way up. Look at that. Down 390%. How does Daddy do it? Oh, me. Wow. I'm down 275 on that one, but I'm up a little bit on the XLE put of 46.90. Let's just look at that, y'all. Jeez Louise. I'm like, wow, what a sucky trade that one is. Let's see what it looks like. XLE. Oh my gosh, I'm past the point of no return, y'all. Look at this. Boy, that looks bad. So, let's see, what do I have? Show all, hide simulations, one expiration. Yeah, so that looks sucky. Let's see what we got though. XLE, they're at 25 days. Right? Probably need to manage that by Friday if we're going to take that loss there. But what I could do is, let's look at the on trade tab. XLE, let's see, I kind of like seeing where my strikes are, right? So we got something in the money, way in the money here. So we've got this, let's see, let me change this to single. That's at a 20 delta. We could roll that up to the 46. That would effectively make it a straddle, wouldn't it? Roll this to 44 to the 46. Let's see what that looks like. Create rolling order. So if we rolled it from 19 March to 19 March, say the same expiration, and rolled that to the 46, make that a straddle effectively, bring in a credit of 49 cents. Let's do it. See if we can get filled there. Come on, baby. Give me some good fill today. I ain't got filled on nothing. Unbelievable. Let's try 48. And 48 it's not going to do it. It's just my Monday. Rainy days and Mondays always get me down. Well, I'll be dang. All right. So let's lock her in. So that's going to make our stats. It's going to pad our stats with a winner, right? Because we're going to take this one and we're going to make it the put. Let's see. We did that one for 56 cents. That's what it says. So we close this one at 56 cents. Put that in. Mm-hmm. That's a tasty trade optimum close. I mean, that's what I did. 2, 22, 21. And we're going to call that a tasty trade optimum close. I love position management, just rolling stuff, closing stuff, taking profits, recentering. It's a pretty fun thing. So we made 46.90 on that one. And then we laid us out another put in XLE. So XLE, Johnny one lot, and we did the 46 put. And I need to put the R out there, right? Or say roll, so we can keep in mind that we're rolling that. So let's go get our option name and copy it. Here we are at the 46. We'll copy that puppy and paste her in there. Control V for vitamins. By the way, so since I've been doing my healthy living, the vitamin gummies that I take every day are 150 calories. 150 calories for stinking vitamins. What delta is that? I take D, zinc, C, was it C, zinc, D, B? I don't know what all I take. 35 delta, roughly. And that trade's got how many days in it? 25. And we may be rolling again on Friday, or we may wait to Monday. So we did that on 2, 22, 21. So that gets us a little bit of our premium sold. And we took out risk in that one trade, got her closed. All right. Anything else? Let's see what it looks like in the Analyze tab now. Let's analyze that trade. Does it look better? Aha! I made me a little TP. Look at this. So even at expiration, we're going to be a loser here, right? But only by $47. So what we'll eventually do is we'll roll this put up some more, right? We'll probably may roll the call out in time, but we got plenty of time to do that. No, I should have known with Joe Biden in office that energy would be going up, 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 up. And I don't know about y'all's gas prices, but man, ours is up like 65 cents here in just a couple of weeks. So when you shut pipelines down and all that stuff, we should be in /CL crude oil, right? But we're not. All right. Anything else that's just screaming at me? Oh, wow. Look, our little SPX trade is doing well that I put on at the end of the other day. So let's just look at the market. Oh, man. Yeah. This is the opening range of the first 15 minutes. Look, it's right at the top of the opening range and just busted out of it. And it even gave me a little ding telling me that it did that. All right, cool. I like what the market's doing. All right, so I think now we've got everything taken care of. We've got our buying power down to 124,180. Did we make a dent on that? 24,180. Surely we came down some. Yeah, we did a little bit. 24,180. Now let's see what our little bitty deltas are. Deltas. We closed all those puts. You would think we'd, there we go, baby. Look at that. See how you do it? You want to keep a little negative deltas, close few you winners, you'll do it. So now we're at 1144 negative. That looks pretty. Oh, that makes me feel so good. 1144 negative. So let's go put that in there. 1144 negative. There we go. Beautiful. Beautiful. All right. And you don't have to build Rome in a day, right? We're still over. We've got under 50% now. So we're heading in the right direction, guys. Heading in the right direction. Now we're heading in the wrong direction here in a second. I'm going to look at my micro trades. Let's see if there's any of those little puppies we need to close. And I got a feeling deep in my bones that there's one that we're going to close that I'm going to be real excited about. Let's see if I can close it out for a winner. And that would be our short call. Man, it is at a winner, y'all. Look at this. We got $18 on that, and it was the last one we needed to go positive. Let's close that call, baby, and we're out of the 25 days. And look at all the green. Y'all see this? Green, 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 green. And remember, we just started this campaign really near the 20th. Remember when we started going in big after we made sure the transfer of power happened in Washington? And man, we've been nothing but green, just waiting for opportunities to take those off. So let's go take our call off. Get you out of there. You have served your purpose, and we're out of that. Total expiration. Let's see, where's it at? There you go, little call. 1575 will get us out. Excuse me. Excuse me. So we're out at 1575. If that's the first time you've ever heard me sneeze, I do sound like a high school cheerleader during a homecoming game. I apologize for that. It's just the way I sneeze. Beth's like, can you not do that a different way? I'm like, if I knew how, but that's the way I've sneezed since I was 2 days old when I had my first cold. All right. So we'll just call this other, right? Because we're just closing it to get out of it. We want out of our old trades. Every one of those, except that one at the top, was profitable. I don't know what happened to us there. It should have been profitable too. I hope my dog don't run across the street and get run over. He's just outside just to scratching to get in. So we'll just call this other. I'm coming in a little bit, Sadie. Give me a second, baby. About 21 more minutes. Daddy let you in. Now, remember, I like taking one trade off every day in my micros, and I like putting a trade on every day, don't I? Anything else screaming for me to get out of it? Any closing signals? Anything saying, hey, Bobby, it's optimal time for you to get out? Here's one that I got a profit of $20.81 on. That's a call too. And I hate calls. And it's giving me a thing to get out of it. Well, why would I not? Especially with me hating calls. That's a 41.20 in the 57 days or 53 days. 41.20. Let's close it. I hate calls. If it's saying it's an optimal time to close it, let's do it. Let's get out of that booger. Here we go. Create closing order. Buy it at 16. I ain't even priced. It's Monday and everything's going against me. So and we're out at 16. So where is that baby? There you are. There you are. We're getting rid of you, nasty call. At 16. Type it in. Take the money and run. And we'll call it Tasty Trade Optimum Close. 12. Unbelievable. 2, 22, 21. Then we'll see what this does to our deltas. Then you need to be thinking, if Bobby closes a call, what does that do to your deltas? Think about it. That's short deltas, right? It's short deltas. So that means it's going to make my deltas longer. I should get increasingly positive deltas, but I did close a put as well, or a call as well, right? I didn't close any puts. So I closed 2 calls, so my deltas should be overall higher now. All right, so let's see if our deltas are indeed higher for the overall count. Yep. Remember we were 11 negative. Now we're right at delta neutral, y'all. Right at delta neutral. Right? And my macros are really positive, aren't they? 52.71. But that's fine. So on this, and because we're about to do something else that's going to give me some negative deltas, I don't mind putting on a positive trade in my macros. So let's do a trade in macros. We're always adding a trade, taking off a trade. I'm going to go to the 15 delta. And most of the time I go over here to the probability of being in the money. I don't like to duplicate my strikes if I don't have to. So let's do the 1340. Let's see if we can get, could I get 31? Is it possible? We'll right click that, copy it. We're not going to get 31. I knew that because it's a Monday and Best van, prison van is stuck in the mud. They don't put 4-wheel drives on prison vans. And we're out, or we're in at 30.75. Let's go put this one, and then we're going to put on our new trade for the day. Ken, I may need you on our new trade for the day. You may have to, I may need your guidance.
Don't compound a bad day with making it worse.
I'll pull you into the cesspool with me, Ken. Oh my
I'm
gosh.
familiar with the place.
Yeah. You've been there before, huh?
Yeah. Right now, my trading platform is schizophrenic. It's I don't know what my net liquid is. I don't know what my positions are. I don't know where I am. It's got a major problem over at Charles Schwab.
And yours isn't Thinkorswim, right? It's just the Charles Schwab, or is it Thinkorswim?
It's SSC.
Okay.
That Street Smart or whatever it is. I got an IRA that's being transferred into Thinkorswim. It hasn't happened yet.
Gotcha.
Schwab is an investment firm. They are not a trading firm as much as they'd like you to think they are. And they don't treat us very well as traders.
Yeah, they think we're idiots, don't they?
They sure do.
Well, in most days, they're probably right. With me, I'm not speaking for y'all. I'm just saying with me.
Well, the other day when my wife was transferring her Ed Jones over to Schwab so I could trade it for her, I had such a bad time with the rep that I called the vice president and I gave him an earful about that so-and-so.
Oh, wow.
Well, he was a condescending SOB.
Oh,
It's
yeah.
like, it's like you don't talk down to people,
No.
and it was not good. I mean, I was not an ass about it. It was more of a corrective thing. This guy needs to go to charm school.
Right. Well, fortunately, with Thinkorswim, most people I've dealt with there, if they keep it the same people, have always been very nice and very helpful. So hopefully when you get over there.
The technical, they're good at Schwab. It was on the retail side, and frankly, the retail trader is treated with utter contempt in the industry.
Yeah.
That's why I like Tasty Trade or Tasty Works. They treat you like you're the goose that laid the golden egg, and you are.
Right, and we are. We exactly are. And I'll be over there soon. I'll still use the twos on toss, but it's just a matter of me getting traded, moved over. Especially if I get mad one big day with Thinkorswim. Yep. All right, so look at this, y'all. We're doing good, right? We made $300 last week, $1,144 a week before. We lost $5.03. We're already up $248.52 for the week. It's pretty doggone good. And we've sold $152. I'm not selling probably the entire amount here because, we're over allocated. So as you can see, everything's going good. We've got profits of over almost $2,000 on the year. So things are looking good for the account. And here's where we're about to do something a little different. And I just want to try to walk through this with you. This isn't something that I've ever done before, okay? And that's why I'm going to walk through it with you and just do a little analysis. So the market is down today, but look at the Russell, IWM, the Russell 2000 ETF. Look at this, y'all. It is up, right? And the market is down. But the Russell is up. And remember, I've told y'all, I've got a pit in my stomach. There's something that's just telling me that something is about to happen. I can't put a finger on it, but I just got this feeling. So let's look. I don't think this is going to change a thing, but let's look at IWM and let's draw a big green monster if we need to. Let's see, this one that's December for Jan, so we do need one on the big green monster. So let's delete that. Remove drawing. Okay. Let's go and draw the big green monster very quickly because I know your time is valuable and it's been a heck of a session with everything tearing up. So we'll right click and we'll go low to the high. The low for that is 190.94. So close, so close. And the high was 217.96. No, that's 217.91. Close, close, close. Hit OK. Now let's go get our other little tool. We'll draw from the 50 to there, 2 to 0. Get on there, baby. Jump on that there. Perfect. Now we'll activate our little big one here because we're going to take the 0. We're going to pull it up to the 200. 0. Come on, baby. 0 to the 200. Close enough. Then we're going to pull the 100 down to the start of where we started doing that little extension. Get it lined up right with the red. There we go. Escape button. Now we can throw this one in the garbage, baby, because we are finished with you. Now we'll call this Jan for Feb, and we'll make it green. Now let's look at the IWM on the volume profile. See how fast that is now? Am I double the speed? Okay, so we're right in the middle on volume profile, right? So we're thinking that this is where volume is traded the most, and that's where it's at over the last 10 days, right? And if we look at our big green monster, let's shrink this in so we can see we are in a fair value range. But notice we are at the top of the fair value range. Where's my little pen? So here's fair value, right? There's our butt. We draw our butt crack. And this is an overbought condition. Oversold down here. But right now we're at the top of this. Wouldn't surprise me a bit to see a pullback to here. Maybe a pullback to here. Heck, maybe a pullback to here. Now let's look at her on our other little chart that we like using, our linear regression. We just like looking at stuff, don't we? You and I are curious creatures. Man, there is no doubt she is in an uptrend. She is in an uptrend, right? But look, man, if you're looking at this as a giraffe, right? And it kind of looks like a giraffe head right there. Every now and then, the giraffe's got to come back to earth and she's got to drink some water, right? I mean, that's a lofty, lofty thing. So here's what I've been thinking about. Here's what I've been thinking about. And let's just see what it looks like. So y'all just play along with me. IWM, let's look at all of our strikes. Now, most people that buy options, right, go out in time. And if you're going to do a leap, well, a leap is a year out, right? Now, I told you, because of my training and bringing up with Theo Trade and Don Kaufman, and I wish I could tell you the exact reason why. He was always like, don't go out a year, don't go out a year. And I was like, okay, Don, don't go out a year. Don't go out a year to buy your leaps. And I can't remember why he said it. I need to sign back up so I can figure out exactly why he said to do that. But he hated leaps. Oh, did he hate leaps? So that's influenced me. So, you know, I'm an open book with y'all. I tell you what I think, and the reason, and I may change my mind at some point, but the deal is that I'm thinking that the most I ever want to go out, if I'm going to buy something, is about 6 months. So if it's February the 22nd, add 6 to that, what's that, August or so? February plus 6 is 8, that's August. So if you went out like to the August or September expirations and you wanted to buy something, right? So let's just go out to August. That's 6 months into the future. And what if we bought and in the money put, right? What if we bought about this 72% probability, that's a 67. So around in this, or either the 250 or 255, right? So you look at the prices on them, you spend a little more to get this, the 255, you pay a little less to get that one. So I normally go by probability of being in the money. So if we're looking at a 70, what if we bought this one? Okay. So we're actually going out and buying an option. Well, let's just look and see what that does, right? If you buy an option, that gives you about a 50% probability of profit. Look at there, y'all. Negative extrinsic value. Probability of reaching 50% on that is 58%, and it gives you a delta of negative 66. And look at this. On our theta farm, we're theta farmers, aren't we? So can you imagine this, that we're taking in negative $4.36 a day and negative theta? Bobby, what are you thinking? I know, right? All right, but then what we would do is, in order to finance this little puppy, y'all, we would start selling puts, right? And every stinking expiration before then to help cover the cost or the initial outlay of that one. So, you know, it's the 22nd. Let's say we start selling something here, right? Maybe at about a 30 delta to start paying for that. So we'd sell a put there, right? To pay for that. Now let's see that it's got them both in here. See, got them both in here, right? So the total outlay, instead of it being $32.55, because we're taking in $1.79 for that, would be $30.61. Now look what it still gives us though. That gives us a delta of negative 34. Now what was it if we had this on there? It was a delta. Let's say delete leg. Without that, we had a delta of negative 66. So you see what we're doing is able to place a hedge that we're at some point going to try to get on for no cost. Everybody with me? So if we did that one for that brings the delta down. So we still get negative deltas, right? And we start trying to bring in theta from this one and to help finance the cost of that outlay. So I like that. I like that. And two, with this IWM, when everything else is down, right? I'm thinking, yeah, it's a no-brainer. So it gives us a little hedge, gives us negative deltas, and we've got positive deltas now. So let's try to do this. Trade. We're going to do it in IWM. So we're going to go out, what did we say, to the August, 179 days, right? It's right where we need to be. 6 times 30 is 180, so we're right where we need to be. And we said we were going to buy about the 70 delta. What was it? Their numbers look like they were a little bit different. It was we were buying the 250 in August. What do we got here? 250. Yeah, about, you know, that one there. 68 delta, 74 probability being in the money. So let's just be consistent. We'll do that one. Okay. So since I'm buying, I'd like to get it closer to that mid price. But we know it ain't going to feel right because it's just my luck. So we'll work the order a little bit. I want to pay as less as possible. Now that's going to use up a little bit of buying power, no doubt. Let's bump it up a little bit. Let's try 32.50. There we go. So we filled it at 32.50, right? So what do you do now? So we own this thing, right? Let's go see how much buying power it has taken. Oh, IWM. Wow. It's taking 0 buying power. And I guess that's based on everything that we have. But look at this, y'all. It's giving us negative 51.50 in delta. It's giving us the negative theta we talked about. And it's giving us a positive vega, right? Brought our vega down. So now what we're going to do is we're going to now start a process to where we're going to try to finance this. And we're going to do that by going into the shortest expiration possible. And we're going to probably sell around a 25 or a 30 delta. 25 or 30 delta around in here to pay for that puppy, all right? So I'm going to go out. I kind of like that one. Kind of like that one too. 31%. That's a 30 delta. 31%. Let's do that one. at 4 days out. Let's go for the $1.70 since my luck is doing good, y'all. Look, uses 0 buying power as well. Look at that. Can we get filled? Nothing. Go in at the $1.69. There we go. So now let's go look at our little structure and see what we're doing. So that still brought in negative deltas, y'all. Check that out. I mean, that's what the cool thing is, right? Brought in negative deltas for that overall trade. Now we're positive theta, where the whole thing was negative, right? Brought in a nice bit of theta, negative delta. And check it out. We just decreased our vega by 46. I think it would be helpful if we actually watched this trade on the analysis grid here so we can actually see what it looks like. Okay. So we're just looking here to see what we've done. So we went out in time, and I don't even know if this even looks good, but we went out in time and we bought a longer dated put that is in the money, and then we sold a short-term put. And you see what we're basically doing is cutting down our basis for that investment, right? So we had to extend a good bit of money, what, $3,000 something to buy this put. And now we're going to begin a process of selling puts against that to reduce the basis so that this hedge will be put on for free or a credit. Anyone got any problem? Got any questions about that? Kim, what do you think about that?
I do this all the time.
I figured you did. I figured you did.
On with Apple, and I also have another strategy where I sell an at the money or just out of the money put, and then I take the premium and double it, and then I go look to the next to a 90 to 180 day out put, and I look and find the extrinsic value equal to twice the premium collected, and I buy that strike. That way, it takes me two rights. It takes me 2 rights to recover the time value, and then I'll work it from there.
That's beautiful. Kim, we need to set you up one day too, like we're doing with
Dimitri.
Not Dimitri, Rick, who's going to be presenting on Wednesday. We need to set you up where you can walk us through a few of those as well. So this is something I've been aware of, but it's something that's new and something that I just watched IWM, man, on the day. It's just going up, right? So that's going to help if it continues doing that. The short put that I just sold, right? We'll be able to close that for a full profit. And keep selling those things against that one that I bought. But if the market tanks, right, we've basically put in a nice little hedge. We've got negative deltas, we've got positive theta, and we've got positive vega. It's a strong trade, and it fits into the portfolio really, really nicely. Really, really nicely. Any questions on that? Dimitri, can you please explain this strategy again? Okay. So Dimitri, what we're doing is we're putting on, let's let you see it without this. Let's see if I can delete that leg, right? Here's what I just did. I expended a certain amount of money. What was it? $3,000 something, right? I paid to purchase a longer dated put, 179 days out. So that's 6 times 30 is 180. So that's 6 months out that we bought this put. And watch what this wonderful put does. If IWM, which is related to the SPY, I mean, it's related to the SPY, it's related to the Qs. I mean, it's the market, right? It's the Russell 2000. So if the market goes down, if this thing crashes, look what happens to the profit, right? I mean, profits are astronomical. If this thing goes from, 210 to 190, well, you're up $2,761 or so on that, right? So now all we're doing, Dimitri, is we're going in and we're selling premium against this, right? So we're selling an option as short as we possibly can. And we're figuring out on the expiration of the 26th, we're doing selling an option out here against that. So if the market goes down and crashes, we're basically covered because we've got that longer dated long put. If the market goes up and we're able to close this one or let it expire for nothing, then we've just booked all of this profit on the option that I sold. So you've heard of a poor man's covered call, right? You've heard of a poor man's covered call, whereas you go out in time and you purchase a call that's deep in the money, and then you sell a call against it, right? In a shorter dated option. What we have effectively done is called a poor man's covered put. We've gone out in time into the future, and we've purchased just the opposite of the poor man's covered call. We've gone out into the future and we've bought a deep in the money option, and then we've sold a nearer dated option against it, and it's called a poor man's covered put. So that's effectively what we've done. And let's see if we can look at what our IWM position looks like on the Analyze tab. All right. IWM. Let's make sure it's showing IWM. There, IWM. No need to change anything, Bobby. So one expiration. Let's do all expiration, 2 expirations, right? Okay. So what do we got here? Let's just look. Keep your eye over here. Let's see if I can draw my little box. And of course, my box isn't going to draw because it's Monday and I'm having that day. So just kind of watch here. So, and then you see the Greeks of the trade, right? Negative 36 deltas gives us positive theta, which we want. We're theta farmers. And the interesting thing about this trade, Dimitri, is Vega is what hurts us during the down move. Well, by doing this particular trade, we're able to increase our Vega, right? Now, our overall portfolio still has negative Vega, but we decrease that significantly. So let's see if we can follow the numbers on the left here, right? What happens? Well, this is effectively a hedge. So if the market goes down, kind of forget that one that looks out there. Let's look at the near term, what it does for us with these combined trades. Market goes down, what happens? We're up $453 on the 27th. How cool is that? I mean, today's the 22nd, if the market goes down. So we have effectively placed in a little hedge here. Even if it goes down way down here, y'all, look at this. On the 27th, we're still up on the trade, $231 there. Well, let's keep on going. Man, if we go down 10% in the market, are you kidding me? We're still up on the 27th, $73.69 on that whole trade. That's if we have a 10% correction, y'all. Here's the break evens down here, right? There's the break evens down here. So what if the market goes up? Well, if the market goes up and we own a put, well, you're losing on this, but what are we doing on the short that we just sold? We're making money on him. We'll just close him out, right? We'll take full profit, and then we're going to reposition this. We're going to keep selling. So keep in mind that we're not only going to sell in this 4-day, we're going to do it again for the 11th and the 18th and the 25th and the 32 days and 37, 38. We've got all of these opportunities, y'all, to sell premium, right, against this little puppy here. So hopefully at a point when we are finished selling in all the cycles that are here or will pop up, we're going to pay for this little downside protection. Kind of a beautiful trade. And in my account, it costs money to do it, but look at the buying power effect, 0. Why would I not do that? It gives me negative deltas, positive theta, positive vega. So now, before I let y'all go, I want to make sure everybody's clear on this, because it's kind of putting in a hedge, right? We're putting in a hedge, and we're just, remember, you and I manage our account by the Greeks. So if you're not managing by the Greeks, I encourage you to. So let's go in and look at our Greeks now. Watch how we improved our Greeks. Our delta went from negative 11.44 to negative 23. So I got even more bearish deltas. Well, what happened to our theta? 122.47. Now, keep in mind, we'd already closed a lot of positions, right? So that took off a lot of things. So we kept our theta about the same, even though we closed a lot of those positions earlier. Now, what's this? What happened to our vega? It was negative 283. Now we're down to negative 204. That's what stings you on the down move. So we helped ourselves there by putting that negative 204. Okay, so we're at a great position here. Our buying power didn't change. Our total buying power now is 24,693, just to get it updated. 24,693. So we're right at 50%, right? No adjustment on the deltas. So it's a beautiful, beautiful, beautiful little trade that now gives us a good bit of downside protection, as you can see from the Analyze tab. Now, let's look at the entire portfolio. Let's go and change this to SPY, because we like looking at our whole portfolio, right? And you know how I've got the price slices set up. So let's go out 4 expirations and see how we're looking at our closest 4 expirations. So we'll hide simulations. Then over here, if you keep it single symbol, we don't have a single SPY trade at all. That's why it's not showing anything. So you got to change this to portfolio, beta weighted. And let's see how our little portfolio mountain's looking. Oh, man, ain't it pretty? See where we're at here? See these little mountains of cash? See our little profit mountain? So on the 20th, you and I ought to be up, $2,700. And look what we've done to the downside. Look at this beefy, beefy, beefy structure here. That's a hedge, y'all. That's VIX. That's all kind of stuff that's helping our little position if we have a market correction. So let's look at the apex of this thing right here. If the market goes down, if SPY goes down from 388 down to 377, then we're up $3,600 on that little apex. See that? Isn't that beautiful? And what we do is just try to keep our little football, right, at the 50 yard line, and we don't want to go across the goal lines in either direction. So you want to keep your little profit mountains above where the current price is. So for example, if current price was right here, we'd be kind of messed up, right? Because all of our profit mountains are under 0. See the 0 line there? We don't want them to be under 0. We want our profit lines to be above where we're at. And right now, that's exactly where we're at. Beautiful. All right. Questions on that? I want to make sure everybody kind of gets that and gets the strategy. It's causing us an outlay of money that we're going to pay for by the selling of shorter dated puts. All right, great session, y'all. Ken, thanks for popping in and helping with your thoughts on that as well. And I will see y'all tomorrow.